AMC is looking like it's going to face some turbulent times in the immediate short term. Let's go over those details in this video. What is up, you guys? Thank you so much for stopping by once again on this fine Monday night. This is ARCa coming at you with an AMC raw price action thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCab. With that said, let's dive right into the charts. Okay, so we're looking at AMC on the 12-hour chart, and if you remember my my charts, from the previous videos, you'll notice that we were riding an ascending channel here, and this ascending channel usually presents a bearish outlook, right? So I'm going to go ahead and change the perspective for you to show you what has been built now upon this capitulation candle here, this huge hammer candle. So let's go ahead and move the chart over to the daily chart here. And as you can see, we are actually now in a descending channel. And usually descending channels present a bullish outlook. But please do note that I'm counting two tests so far of the resistance of the golden rule of three. Okay, so usually we do need three tests of the resistance followed by a massive capitulation and then a true breakout attempt on test number 4. So in this case, we're actually now in the process of actually confirming the descending channel with a further touch down here. Okay, so I am looking at a few targets that we are going to be talking about right now. Okay, but we're going to start off this this medium term time frame analysis with the ARC-Series Crypstex indicators. Okay, so the first indicator we're going to be looking at is the ARC DBSi, which is a statistical indicator that actually takes a metric on every single candle printed on the asset's particular time frame. In this case, the daily chart, right? And the measurements actually give us a value or a strength score right up here, displayed as a percentage value, right? So you can see that the bears are in the lead right here with a 64% lead over the bulls at about a 36%. Okay, so another thing that the ARC DBSi does for us is actually gives us buy and sell signals. So in this case, we do have a sell signal printed on this candle here on December 6th, and it is still suggesting a downside continuation. Okay, so another thing we can do is that we can actually load a 13-day exponential moving average. So let's just go ahead and remove some of these metrics here and change the value of just one of the EMAs. In this case, this one here. I'll make it a bright yellow so that we can see it, and we'll change the period to 13 for a 13-day representation of an exponential moving average. Okay, so DBSi actually, as long as DBSi reads that the 13-day exponential moving average is above price action, that usually means it's pretty bearish. Okay, so in this case, the sell signal with the little red dot down here still honoring to the downside. Meanwhile, the 13-day exponential moving average above us. Okay, so that's still a very bearish outlook, and DBSi is on point with that. Okay, so let's go ahead and remove DBSi and let's load the ARC enhanced MACD. So this is now another ARC series indicator which can actually be available to you. Okay, these indicators do come as a subscription package. All 8 will be included. Please reach out to me on a DM and we'll go ahead and go over the details as to how to acquire these indicators. I'll give you those subscription packages. One thing you should note is that the subscription for these indicators are not the same as acquiring a subscription for TradingView software. Okay, as the Crypstex authors are actually authorized retailers within the TradingView space. Okay, you guys, so definitely if you're interested, send me a DM. Okay, so now the areas of interest that we're talking about based on the continuation to the downside. Enhanced MACD also has a downside continuation, and I think it's on par with the DBSi sell signal. Yes, it is. They both printed a sell signal on December 6th. Now it has nothing to do that they're both Crypstex ARC-Series indicators that print at the same time, because they do differ at times. Okay, I mean, for example, we can actually load up an ARC Armor, and you'll see that the Armor's sell signal may not even be there, or it could be at a different time. So let's take a look right here. Oh, in this case, actually, Armor did load it at a same date. So this is actually pretty strong. I usually don't see so much confluence with the sell signals on the indicators being on the same date. Usually one of them would be a little more aggressive or a little more conservative than the other. Okay, in this case, everything is pointing to the downside as far as the Crypstex indicators, including the 13-day exponential moving average from DBSi. So now the downside targets that I'm looking at are these in display right over here. Okay, so if I'm looking at this based on just raw price action, I can actually see a little tiny bounce faced from the 1.618 at 399. Okay, so in this case, we can actually use the 399 level at the 1.618 before a bounce and testing our current lows, presently at about $4.40. Let's just make sure with the aftermarket, $4.38, that is, okay, with including the aftermarket closure. So yeah, we could potentially find a short-term bounce here, and then we would eventually continue on to the downside. So the idea here is for us to validate the descending channel, and that usually requires two touches of both the resistance and the support. In this case, you can see that the second touch has not been met just yet. So this could potentially be that time to do so. Okay, so now in doing that downside, or in realizing that downside target, we do have a couple other things to look out for. First of all, the 2.272 at $3.65 landing in direct confluence with the support line from the descending channel itself. Okay, now that support line, let's see, yeah, it is actually 365. So 365 is definitely an area. We can also just wick down real fast to that 2.618 at 347 before a recovery, similar to what a candle like this would do. Okay, now these little boxes that I have here, okay, these are very important to notice, and why is because if we just zoom out a lot, we can actually see that we had a couple gaps that from the January run up. Okay, so in this case, let's just go ahead and get rid of the 13-day exponential moving average, and you can see that there is a gap here comprised of a candle from January 22nd wick high and the January 25th wick low. So that's Friday to Monday, and you can see that we actually did gap up, making a gap that's about $2.30 to $2 and about 37 cents. Okay, so there is that small gap, and the higher gap is actually candles, let's see, from Tuesday January 26th to, oh my goodness, to this candle right over here on February 9th. Okay, so it did almost close that gap. However, we didn't close it, and it's still very much there. Okay, so what I'm saying is that this could be a psychological component. Okay, so 319 to 324 is that first gap right up here. Okay, so we need to make sure that we do keep an eye on those things, because there is the potential to where the price action can actually wick into trying to close these, and in doing this whole test continuation for days, we can actually face a wick down to the downside. You know, it's not guaranteed. I'm just saying that these are psychological things. As we approach them, sometimes the sentiment wants to close them. Okay, so if I see them, trust me when I say that many others see it as well. Okay, so definitely keep an eye on that. Okay, you guys, let's go ahead and move on to the last part of this chart, which is going to be the RSI. So in this case, actually, let me just go ahead and remove this line here. It is not pertinent to what we're speaking of now. So divergence is the opposition of price action versus momentum, and in this case, momentum represented by the RSI. So RSI is relative strength index. Okay, so for the new viewers, the pink line is a 14-day simple moving average, and the purple line is the RSI signal itself. Okay, so this gives us that bias for direction. So what we're looking at here are actually three primary drives of hidden bearish divergence. Now, that hidden bearish divergence occurs when momentum is making a series of higher highs and price action is making a series of lower highs. Okay, so in this case, we are noticing that we're going through price action from, to get from point A to point B. So that actually makes these drives phantom. Okay, so we are looking at three primary drives of phantom hidden bearish divergence in play currently, and now the 2-day, we're looking at it on the bi-daily, by the way. Okay, so you can see that the bi-daily RSI is still suggesting a massive downside continuation, very much on a nosedive, and it is also in the bear strength percentile. So that is a very strength percentile that we're currently sitting on right now, which is the last one, and it is literally in the middle. We're right in the grips of it. Okay, the moving average still suggesting a downside continuation, also bearish for the fact that it is above the signal line. Okay, so definitely downside is suggested for the bi-daily time frame. Okay, so let's just go ahead and open up multi-pane here so that we can see a few time frames and try to gauge a deeper understanding of the momentum or the price coming in for tomorrow and for the next days, right? So now the 30-minute immediate short-term time frame is suggesting a slight downside. Okay, what we have to notice is the position that we're in, which is very important. Okay, we are currently at the bear weakness percentile, but at the very deep areas of the bear weakness percentile. That usually has us in a gravitational area. Okay, so we can actually be gravitationally pulled right into the bear strength as long as we do maintain within this deep area. Okay, so now the bi-hourly time frame is suggesting pretty much a neutral direction. Okay, another thing to keep in mind is that we're definitely within the strength of the bear strength percentile. Okay, so we're right in the grips of it. Moving average suggesting a slight downside. Okay, so as this pivot starts to move away from the shallow areas of the bear strength percentile, we're more than likely to face more of a mass down to the downside. Okay, so as we approach the deeper areas of the bear strength percentile, the likelihood of jumping into oversold percentile is greater. Pardon me. Okay, so now let's look at the 6 hour. 6 hour time frame is suggesting some sideways trading. Again, the position is very important. We're actually, for sure, we're definitely within the grips of the bear strength percentile, and now we're approaching that deep area of the bear strength. Okay, so it is sideways trading, but the position is more important than anything in this case. Okay, so now the daily time frame is one that I'm starting to give some credit to. Okay, so the reason why I'm saying this is because it's right at the junction of the bear strength percentile and the oversold percentile, suggesting a continuation to the downside while being below the moving average. All of this is suggesting a continuation to the downside for a multi-day continuation. Okay, bi-daily still suggesting downside as we saw earlier. The 3-day time frame still suggesting downside well within the bear strength percentile. So yes, you guys, we are looking at a multi-day low here, and the 5-day still suggesting downside, now entering the bear strength percentile. Please know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment. Okay, I need you to do your own DD and everything will be just fine. Okay, you guys, so please do remember the targets that we have right here. Potential short-term bounce from the 1.618, finding resistance at either the 1.272 or the current lows at about $4.38. And then continue to the downside. Okay, so these are definitely the areas of interest. I don't see this coming in just yet, but please note that whatever reverse split that we're facing for the AMC asset could definitely, I mean, I'm just saying it's a very high probability that we can capitulate down to these levels down here, but we don't want to see that, right? We're going to be talking about the more relevant ones for now and move on or cross the bridge when we get there. Okay, you guys, so if you have any questions or concerns, please don't hesitate to reach out to me on Twitter or Discord. I'll make sure to leave those links in the description below for you to consider joining the ARCa trading community. Okay, you guys, with that said, I wish you well, a very good night, and I'll catch you at the bell mañana. Adios.